Welcome back to the final part of the Online Collections Technology Think Tank. For those who just joined our session, I hope you enjoy this one. We've had 3 previously, which have been really, really good. Some great content, lots of interaction, which we hope to get in this session as well. We're going to be talking about the future of collections technology shortly, and would like to thank, of course, our sponsors Liteco for making helping making the event possible, and of course our other sponsors across today as well. As usual, we always want people to be involved, so have a look at the panel in front of you. On there, it's got an eye for information about the event. We've also got a bubble which looks like a person on there. It's got information about all of our speakers, so please have a look at that. A bit of background about what they do. They're introducing themselves shortly, and also we've got some info relating to downloads that you can have a look at about our sponsors, but also some of Credit Connect's future events. So have a look at that. Lots coming up over the next year or so. Lots to talk about, definitely, as well, with those big announcements today around the household utility energy bills going up and interest rates. It's going to be an expensive year for us all. But yeah, finally, give us your thoughts on that as well. So we've got we're going to be running some polls, so we'd like you to participate in that and give your feedback at the end of the event as well on your thoughts on this session, but also ask questions. There's a speech bubble icon there. Please click on it, ask your questions, even comments as well. We're interested in those, and we'll share them with our panel. But enough from me. Let's crack on with the final session of the day. We're going to be looking at future of collections technology. I'm going to hand you once again over to our fantastic chair, Vanessa Northam from StepChange, who will introduce our panelists and get the conversation going. Vanessa, thank you.
Thanks very much, Colin, and good afternoon, everybody. I hope you're still with us. I'm sincerely hoping there isn't another breaking news story for us to contend with. I think three pieces of breaking news is sufficient for one day. So yes, future of collections technology. If you've joined us so far today, you'll have heard some really great conversations, and this is what it's all about. It's a conversation. It's not a panel debate. So please get involved if you want the conversation to go in a different direction, or you vehemently disagree or agree with our panelists. So without further ado, let's introduce our panel. We have our first and only female speaker in Sam Challenger. So if anybody's watching and would like to take part in a future event and obviously join me and Sam, that would be brilliant. But we need to make sure we've got some diversity of thought there. So I'll ask the panel to introduce themselves, about their organisation and an insight from the last 2 years, and then we'll crack on with the conversation about the future of technology. So Sam, I'll come to you first.
Hi, thanks Vanessa. So I'm Samantha Challenger. I'm with Billing Finance. We are a car finance business in the near to subprime sector. So the last 2 years have been very interesting for us, and I suppose it's a time none of us could ever have predicted of having lived through. My 4 walls at home and not speaking to anyone other than my dogs most days was the entertainment I had. And to be fair, I thought I'd enjoyed it. If you'd said to me, had I struggled in lockdown, I think I would have said no. I'm quite happy in my own space. But as things opened up and as we went back into work and I got more of my team back in, we all realised how affected we had been and how much we had missed each other and speaking to real people, not just screens, and not seeing our own faces on the corner of a screen every time you try to have a conversation with someone. And I think now, as we're coming towards the end of it, we are seeing a lot of people almost suffering with a kind of burnout of almost a mild case of post-traumatic stress, because we've all just coped. And I think we're hearing it on the calls with our customers as well, not just on the calls, but on the interactions that they're coming through on web chats and the kind of portal information, is how, as things are opening up, more and more of them are struggling with anxiety. No one wants to go back out. No one wants to be subjected to whatever new bug is coming next. So I think the last 2 years have been incredibly interesting from a human dynamic. From a car industry perspective, I don't think there's ever been a time when cars were an appreciating asset as opposed to a depreciating asset. So within the car sector, we kind of have that going for us at the moment as well. But yeah, that's a little bit about me to just get the conversation going.
Thanks, Sam. Yeah, I mean, who'd have known that you could, buy a second-hand car and it would be worth more in 6 months than yeah. I mean, another one-off from a pandemic. Dan.
Good afternoon, everyone. My name is Daniel Calcott. I'm from the Digital DRA. We're a debt resolution agency that's focused on helping people resolve overdue accounts whilst moving away from the collections narrative. As a business, we're very much focused on digital channels and implementing new tech for customers to utilise. I'll keep it nice and short at my intro.
And what have you? I mean, obviously, have you started as a result of the pandemic, or was this,
No, so the Digital DRA project I've been working on probably 2 years now. The pandemic kind of emphasised the need for what we're trying to do a little bit more. So definitely now coming out of that, we are seeing how what we've built and deployed is able to slot in and help our clients in a time when they need it.
Great stuff. Thanks. And finally, Rich from Lytico.
Yeah, sure. Good afternoon. Rich Corris, Director of Customer Success at Lytico. So I guess just quickly, what's Lytico? We like to call ourselves a digital completion solution, but really if you think about e-signature, doc collection, the ability to do like secure payments, things of that nature through that platform, identity verification, et cetera. Pretty big in both financial services and auto industry in the States, and also in telco, financial services, insurance and whatnot over in Europe and elsewhere. Ironically, I started here 2 months before the pandemic hit. So my first major deployment as an employee, and at the time, the only character in the US, we're an Israeli-based company. So we have a lot of folks on your side of the pond, but not necessarily over here. I was the last person allowed into a Capital One facility that wasn't an employee because they were shutting down at the start of March, just as we ramped them up for the tool. What I've taken away from this, and Sam and Dan, I think you guys nailed it. It's the same thing here. In the States, it's ironic. People can sell back a used pickup truck for what they paid for it 3 years before, which is insane. But I think for us, what I've seen with clients and customers in general, I've spent years more like in the push to try and get people into digital engagement. And now all my clients are being dragged into it, right? So even those that are reluctant to adopt or get into that side of the fence realize you got to go where your customers are. You have to be where the action's at if you want to stay engaged with these people and to really meet their needs and do right by them as well. And so it really has become a dramatic shift, whether you're talking business banking, branch banking, you name it. It's just a totally different animal. So other than that, I think we all have similar experiences there. So I'll leave it at that.
Thanks, Rich. So yeah, but necessity is the mother of invention, and the pandemic has absolutely expedited that, hasn't it? So we've talked a lot across today about the use of digital and the latest, the oldest utilization. But what does the next 10 years look like, and what can we learn from the pandemic? So, a previous question was, what's the role of crypto in the future of collections? We're not going to discuss that today, I'll just reassure you. But we've got open banking, we've got AI. What does it look like in the future, and what can we learn from the pandemic? So who wants to open that up?
I'm happy to open that up. I think from our perspective, we had very little of a self-serve offering or a digital offering to our customers pre-pandemic. We knew we wanted it. It was on our path. It just wasn't urgent yet. And then March 20 happened, and suddenly it became the most urgent thing we had to do. And we rushed out and we implemented various different bolt-ons that helped ourselves and our customers. And they were amazing. They saved us so much noise from customers and help customers tell us things that they didn't want to tell us on the phone, or they didn't have time to wait in queues to tell us. They could do it in their own time when they were psyched up and ready to do it. And I was speaking to a colleague about today's talk, and I said, it's quite funny that if someone had said to me, I don't know, 5 years ago, if you sent someone a digital platform so they could fill in all the information that was needed, would they do it? And I'd be like, no, I don't think they would, because the whole point of getting them on the phone is almost putting them on that spot to get the answers. But if you've got something that you don't want to do, something that's unpleasant to do potentially, and a company gives you an easier way to do it, or a way that suits you best, well, that's what we have to look out for, because not everyone wants to talk to us. Not everyone wants to be put on the spot, and people shouldn't be put on the spot. They shouldn't be made to feel shame or anything else about explaining why they can't pay these debts. So we've given people choices, and they have reacted to that, and they've all chosen slightly different choices. And I think over the next 10 years, as technology continues to grow, and I'm not sure it will grow at quite the same rate it did during the pandemic because of the change in necessity. I think we're all just going to slightly tweak and better and improve our processes. But it's just giving the customers the opportunity. It's not taking away anything. It's not saying you can't speak to someone anymore. I think AI helps, but I think it's if a customer chooses to engage with you on one platform, that's the platform that you should continue to try and engage with them on, as opposed to they disclose something on one platform, but we're not comfortable on that platform. So we then make a choice and then contact them in a different platform. I think that's totally wrong. Because in a collections world, over the last, 100 years, nothing's changed. You either can pay your debt or you can't. And if you can pay it, let's work with you as to how you can pay it. And if you can't pay it, well, then let's work with you as to see how we help you resolve it in the quickest way. If you won't pay it, well, then that's, again, a slightly different task. And I think, when we were chatting previously, I kind of said my mentality has always been a bit of an 80-20. 80% of each of our strategies will fit the targeted audience. Sorry, our strategy will fit 80% of our target audience. You'll always have the peripheral people who want something different. And you have to have the tools and you have to have the staff who are able to then focus on those 20% until you can build something else up. But in the collections world, what are your choices? You can come to a payment arrangement with a person. You can write off their debt. I don't know. Anyone else out there got any other options for them? So that's it, really. And all we've got to do is work at how we tailor those strategies to help those people. If someone genuinely has nothing and cannot pay you, well, what are you going to do about it? In real terms, what is there that you can really do? So,
really interesting point, Sam, because there's going to be more and more people who've been financially vulnerable becoming even more so. There is no money.
Absolutely, and
all
open
the tech
banking.
in the world. Yeah,
No, exactly. All the tech in the world is not going to change those positions. But open banking and people being open to disclosing information to their creditors will help their creditor make a more informed choice around what strategy to go down. Because if someone can pay something, and they should, I'm in collections, I'm obviously always going to say people should pay their debts. People should pay towards them if they can. But if you genuinely have nothing, what is the point of continuing to beat people down with chasing them and passing them out, debt sales and everything else, if they gave us all the information? So for me, the next kind of year and 2-3 years is to try and sell the benefits of this open disclosure and how best us as creditors and lenders and debt collection companies use it for the right reasons. Obviously, we're all here to make a profit. We're all in business for a reason. But there is a human cost as well. And we all do have to look at it and say, if I phoned you, I don't know, once a month for the next 3 years and you genuinely have nothing and nothing is changing in your situation, what is the point of that? And I'm only throwing good money after bad. If I'd found out at the first phone call, or maybe 3 phone calls in, that your situation was what it was, nothing was ever going to fundamentally change, I would put a different strategy in place. So AI helps, online, disclosures help, open banking is going to be a really big help. But again, it's all only as good as we sell it, and it's all only as good as the customer discloses it. And I think at the moment, there's a lot of distrust, and the breaking news stories of today and future ones that are coming down the road, I think, are going to discourage people from open banking, because I think they are going to continue to show how much people distrust those in power. And if you distrust those in power, why would you trust your bank? Why would you trust your lender? And I think for me, that is where we have as an industry to really try and push that through differently and show that we are trying to ultimately help people get out of debt in the quickest time, yes, but it does also help them get out. And, you know, from Daniel's perspective, we've got 2 debt collection companies who work for us. One is normal, old school, mainstream telephony, letter, and one is a total digital agency. It isn't Daniel. And people are preferring digital. People are preferring not to have to speak to us, not to have to disclose to us. People are preferring to do it when they are sitting in their own space, in their own quiet time, as opposed to when we intrude on their time, when they're rushing out to do the shops or sitting at the school gates. I think giving customers that choice is the way forward.
Bring in Daniel there, you know, from an open banking perspective. I worked in open banking for a couple of years. I mean, is open banking a feature of your journeys, Daniel?
Yeah. So obviously going on from what Sam's just mentioned there in terms of obviously digital journeys in collections. Obviously, I couldn't agree more. We're a digital agency, and obviously I think that the pandemic almost let the cat out of the bag, and I don't see it slowing down now. Especially as your millennials and your Gen Z become the powerhouse of the economy. How do those guys engage with businesses today? So me personally, I don't answer the phone to if I want to speak to a business. I try the web chats, the WhatsApps, and that's how I want to engage. And I know that's a very popular channel. In terms of open banking, yes. So we utilize open banking in 2 ways. PIS, Payment Initiation Services, effectively a bank transfer from within our portal from the customer to us. So that customer journey would redirect them to their bank app. They'd verify that payment with the face or thumb, and that would pay their account. It's probably a little bit too early. We only launched this partnership with our supplier in January, so it's a little bit early to share actual stats. But one thing I can say is that particular payment method is more popular than some of the others that we have on there, which surprised us here. So it's already proving to be more popular. And then the other feature we utilize open banking for is AIS. Account information services. So using that, we're able to pre-populate income and expenditure forms, look at customers' actual income and expenditure based on the bank account information, and from there, obviously, we're able to then point them in the right direction based on that disposable income, and set up affordable and sustainable plans, because that's kind of what we want to do. If we get an affordable and sustainable plan in place, it's much better for the customer, but it's also much better for us because it's going to have less chance of breaking. So one of the things that we are tracking are open banking plans versus manual plans. What are the breakage rates on these, and what's the success? So in a few months we will be doing a case study on this with our partner and releasing that. So it probably be in a better position to share some actual stats then. But in short, yes, we do utilise open banking currently.
That's great to hear, and we eagerly await that case study and report. I'm sure everybody listening will be signing up for your releases. In terms of the consent, what proportion of customers offered that in the journey are consenting?
Yeah, so this kind of ties back to the PIS, the actual payment service is definitely more popular than the AIS, which is the populated payment plans and income and expenditure forms. So again, it's probably too early to give you actual stats, but the PIS is definitely more popular. But I think with the AIS, it's difficult because where it's with a lender, if they utilise open banking, they're much more likely to consent to giving that information because they're getting something out of it. So they're getting a loan, or with us, it's a little bit different. People are using it, which again we were relatively surprised at in the very early stages, because one of the things that were important for us was to get this tech embedded into our customer journeys early on. So as the popularity of open banking grows and increases in usage within other areas of the journey, so earlier on, for example, at the acceptance stage, they're much more likely to use it with us. So for us, it was about getting it embedded early on, so we're in a position to utilise that as best we can when the time comes that it does boom, which I do think it is going to come. If you look at usage stats of open banking from 2020 to 2021, there is growth in that channel, and again, I can only see it getting stronger.
Thanks, Daniel. Great to hear some on the ground experience in using the open banking piece. And I think, yes, it's about that utilisation and that benefit exchange, isn't it? So the more, we haven't reached the tipping point yet where, it's part and parcel of a lending decision or a collections journey. I think the PSI payments, that's a really good example, but I think there's I don't know, is there a disconnect between that part of open banking? Because that doesn't feel like open banking. It just feels, this is a much easier way to make a payment.
Yeah.
Versus...
Yeah. So, I'd almost classify them as two separate things, because the PIS, that utilising that open banking is more about convenience for the customer and speed of just being able to pay their account and move on and get on with the day. The AIS is a little bit more detailed, and the customer is sharing obviously more information. And given obviously we're a resolution agency, but obviously in terms of where we're looking to resolve that account, and obviously payments are a large part of that. So we are anticipating that customers are sometimes going to be a little bit reluctant to share that information because sometimes customers are on the back foot, like, are we going to ask for more than what they've got, or it's almost, do they want to share that information with us at that point? And that's kind of where the trust element comes into it, which is why we're doing a lot of work around our brand and how we position ourselves to the customers that we're working with.
Brilliant, thank you. I want to bring Rich into the conversation now. I mean, in terms of, anything to build on Daniel's comments there from an open banking perspective?
Yeah, sure. I mean, I think on the open banking side, I'd agree with both Dan and Sam, because there's a level of trust, right? And let's face it, I mean, over 30 years ago, I was dialing for dollars, right? I was working for Citibank. I was a bill collector, and it was a very different world than today. But there's a lot of premise that's the same. About a dozen years ago, I was working for a platform that did chat engagements, and I used to run their financial services division. So we had like 9 of the top 10 banks in the US, and I think 15 of the top 50 in the world were direct clients. And we started using it in collections. And the funniest thing, at first, I was a doubter. And I was like, oh, no one's going to engage, et cetera. Well, there is a subset of the population that would. And most interestingly, back in my days at Citi, they taught us 70 to 80% of a phone conversation is actually tone, not the words you use or what you say. And the fact that you're calling people at work many times, if they're working, right? And or they're put in awkward conversations where most often they're not the only person in the room. No one wants to talk in front of people about this. You can engage in chat. Literally, if you're talking 8 or better out of 10, right? Out of a score of 1 to 10, and it was a forced CSAT, so you couldn't end the session without it. We had a 95% CSAT rate. We had 85% of the people saying this is my preferred channel of choice, right? Offering those alternative channels is huge. So I think open banking, and when you tie it with digital engagement and those options, and again, like I said at the beginning, meeting people where they want to be met. Not everyone does have the ability to pay. Not everybody's going to have the willingness to pay. There are some people who make a living out of trying to scam, right? That's, there's each and all. So there's no one size fits all. I think there's a subset of open banking, if I had to call it right now, based on my perspectives and what I've seen, it's a younger demographic. It's people who will be probably also in one of two scenarios. They got caught in a temporary situation. They really want to resolve it, and they're willing to kind of share some level of trust with you as a brand as well. Or there might be some people that really are just in horrible situations, and they're trying to open the books because either a settlement is maybe their only option, or I really, really can't, do this, and they're looking at debt forgiveness or some other method of trying to deal with that. I could see it as a very great tool for like a consumer credit counseling service, or for certain other areas in that neck of the woods as well, right? And certainly agencies, like as Dan's mentioning, for those who are willing. And, DRA, if they got a good rep, certainly that's going to make a difference. But I think the biggest challenges that you're going to face right now is for those people who have the ability to pay, as long as you give them a vehicle and a method, and it's less, I guess, damning in their eyes and or to the people around them so that it's not as judgmental, I think you have a great shot. I do believe absolutely, though, it's going to be a younger crowd or a more digitally engaged crowd to begin with. Now, 5 years from now, Lord knows, but I think the biggest tools too might be proper machine learning and maybe AI on that side of the fence to help you also better identify those. I still see those tools best for really just trying to help you try and engage people right now and finding those when and where and how to contact them. But then from there, it's all, the art of the conversation or the solution.
Thanks, Rick. Just want to pick up on tone. We can all remember those training courses, on the telephone, you use body language. You can't see you. So tone was everything. How in a digital world do we get the tone right? Because we've lost so much. We've got no body language, we've got no tone, we've just got words. So Daniel, who's cracking the tone? And is the tone and the trust going to unlock open banking?
I'm going to say Monzo Bank are cracking the tone. I think we could all learn from how Monzo, and I've got no affiliate, I'm going to put that out there, I've got no affiliation to Monzo Bank. They are cracking the tone. I often spend time just looking at their website and how they engage with people. And we've done a lot of work internally around plain English. Because I think with businesses, we all think we're cleverer and betterer and everything else than everyone else that's out there. And we write letters in a way that are not conducive to engagement. And I think when we first started with some of our digital journeys, we lost sight of who you're trying to engage with. And if you try and show the other person that you're in a position of power or you're better than them or you're whatever than them, it doesn't work. So we've really kind of taken it down. And we did some studies, or I enlightened some people around the average reading age in the UK. And it's quite scary. And I'm sure everyone on this panel knows it's what depending on the reader, it's between 7 and 11 is the reading age of the average person within the UK. And then we write letters to people that you pretty much have had your lawyer draft for you. Well, no one's going to understand that, and they're just going to be scared by it. And if they're scared by it, they're not going to engage with you. So there's been a whole big learning piece around linguistics and how you write to someone that immediately engages that trust because they feel that you're on a equal platform with you. But yeah, if I had to choose one company out there, for me, it's Monzo Bank.
I'm a super fan of Monzo. Absolutely, yeah. They do really crack that tone. I mean, just broaden the conversation out. So, has the sector taken a telephony approach and just emulated it online? Okay, is that what the sector's done? I'm interested from Daniel. You've started in an online, and in 5-10 years' time, will we be looking at collections being more emulating online customer experiences from the Amazons and I don't know, from those types, because it's been a sort of a thou shalt pay. It's never been a customer experience, but actually is that where the future of collections is going? Because we're looking at sort of component parts of technology, but what does the future of collections look like from an engagement perspective for people that have never been in it? Because are their expectations different?
Yeah, so for me, obviously, that your tone and language is very important, and just because you're digital, you don't have to lose that. So like you made reference there to people that have potentially never been in this process before, never been in debt, and times are hard, just coming out of a pandemic. There's been other announcements today. So again, your language is really important as now more than ever, because I spoke about this before in terms of focusing on engagement. Sam mentioned plain, simple, easy to read language. You can use different color schemes within, make your content engaging, like customer experience when they're dealing with you online. Make everything, jazz everything up a little bit, make it almost look pretty and eye-catching, and you start to see that engagement increase. So that the language you use, emojis, little things that give the brand. It's worked well for us because it gives our brand almost the personality that's probably lacking in the collections industry as a whole. And by going down that path, it creates that link and starts to build that trust between the business and the customers that we're trying to help. And for us, all our contact strategies are focused on engagement. It's not payment. We're not there to collect from people. It's let's chat. Let's see how we can help you. Because we're trying to resolve accounts. Yes, a large majority of that includes payments, but not everyone can pay, or sometimes people, it might just be a slight hiccup that you don't want to push them down a traditional collections route if you recognise that it's a temporary. You need a temporary solution to help these customers, and now I think debt can be embarrassing, especially if you've never been in debt before. And if the first email you get is we need you to phone us and pay us, it's like, well, hang on, I don't want to speak to anyone about this. Your digital channels provide a less intrusive journey for your customers to take to openly discuss things that they might be slightly embarrassed about. So it helps open that door to engagement. From there, you can work out how best to help them. And I think that's important now more than ever, I think.
Rich, anything to add? I love your dialing for dollars. That's an alliteration I've not heard for some time.
Yeah, no, definitely. It was, it goes way back. I mean, I was doing that in the late 80s, for heaven's sakes, and through the 2000s. I wholly agree. The perspective of this is, long ago, we took it as it's our problem, right? And you're calling a customer and you're not paying me. And whether it was early stage, late stage, recoveries, you name it, it was always kind of like, a lot of people took it personally on the banking side, even, right? Or in the collection agency side. And it's the customer's problem. And with the pandemic and everything else that's gone on, or we look back even a while back to the Great Recession, about a dozen years ago or so here in the States and whatnot, there became a flood of people who, as Dan mentioned, this might be the first time this has ever happened to them in their life, right? And I knew great people who were really just wrong time, wrong place, and they got hit right between the eyes. So being able to recognize that, allowing them, definitely making it a non-threatening per se process, making it clear and concise and easy. If I go to a website and I have to sit there and stare around like, well, how the hell do I get help if I need it? And if I don't want it, how do I avoid, having like something come out and almost reach through the screen and grab me? Just take me to what I need to do. Help me understand what my options are. Certainly these days, it's all about mobile, and I don't want an app. All right. Call it, say what you will. I'm not wearing a tinfoil hat, but I don't like the fact that there's a lot of apps out there that are borderline malicious, or they track too much, or there's the opportunity for challenges there. I want something that's going to be able to work without having to use additional technology for it. I mean, that's the whole reason why we do what we do. It's all mobile web, so there's nothing you got to do there. But it's all about that kind of ease of use, education, and just Dan and Sam both, I think they nailed it. It's that olive branch in a way. Let's just talk. Now, whether it's a chat, whether it's something else, a lot of people in the States love the idea of chat because it's a written form. And Lord knows if you cross the line, you're going to have the federal government eventually come down, and that lender or whoever is going to get hit right between the eyes. And trust me, I've had to answer even in court cases on that type of thing. You don't want to explain to an attorney 5, 6, 7, 8 years ago something that was in written form in front of a jury. So, and people get that on the other side. So I think those digital engagements, those options, making it easy, making it clear, making it look pleasant. Otherwise, that's the tone, and that's the options. I think that really take it home for you.
Thanks, Rich. We've got a great question just come in, and one I've not even thought about. So from Dennis from Equifax. Will new engagement media such as WhatsApp, Messenger, Zoom, Teams find their way into collections journeys, allowing face-to-face conversations to take place, which can help with tone and messaging? So we keep obsessing, don't we, that technology is online and we lose it all. So I've been using, I'm due to move house, and the removals companies, instead of sending somebody to look around my house and add it all up, I just took them around the house on WhatsApp. So do we see face-to-face collections coming through this way?
I think I do eventually. I suppose, again, it would depend on our staff back in offices. I think one of the things we found during the pandemic is some of the conversations, if a customer's unhappy or irate, it seemed a lot more personal when you were sitting in your front room of your house than when you were sitting in the office. One of the things we always tell our collectors is it's not personal. Someone is frustrated, but it's not at you. But, I had some youngsters who were working in their bedrooms. It was personal. They were being shouted at in their bedroom. So I suppose I do think that face-to-face will come into it. I mean, I immigrated 20 odd years ago, and I didn't see people unless I flew back. Now I can put my phone on and see, milestones and people being born and people growing. So yes, we will adapt to it and we will accept it. I think in my world, we're a smaller business, so it will take a bit longer. I would probably let the risk go to some of the bigger banks first. And one of them at the moment are advertising that they do all the face-to-face contacts and help you grow from a sales perspective and a normal customer service perspective. So why wouldn't that translate to a collections world?
It's interesting. I'll say this. I agree it can definitely be a useful tool. I would look at it more on the counseling side of the fence. But, the funniest part was I don't think I knew a person I ever worked with who ever used their real name in collections because they were worried about death threats. We used to get and again, I worked at good places where it wasn't like nasty, but I had to clear out a couple of call centers because of bomb threats and things of that nature back in the day. And I don't think the world's a kinder place than it was, back in the 90s, necessarily. So that being said, I absolutely could see this relationship banking type of situations. I think the consumer credit counseling type of situations, it may be an interesting offering for people in some cases. I knew more than a few people who would never want their faces out there, especially with social media, because then next thing you know, they might be plastered all over the place, cancel culture, whatever. So sadly, I think it's a double-edged sword. But yeah, I think in certain limited cases where they're coming to you for help, potentially, yes. I'm not sure if I'd use it though, ironically.
Daniel, what are your thoughts?
Well, I wouldn't say no. I think there's potential for that channel to grow, definitely. I think Sam mentioned there's already a bank that advertises that on TV. So, and if the time came, that's something that would definitely be open to looking at in a little bit more detail. I think just looking at that question, they mentioned WhatsApp as well. WhatsApp, absolutely. So we actually use WhatsApp, but only as a tool if the customer chooses to engage with us that way. So we don't use it as an outbound channel, but you are able to start a WhatsApp conversation with us. And again, is something that we, being a digital business, we want to provide as many options as possible for a customer to choose from, so that they're going to choose how they want to engage with us. And WhatsApp, we are quite surprised with the uptake in that, because I know that same with SMS, when that first became a big part of strategies, will it be seen as intrusive and all those kind of questions around it, kind of the unknown. But again, WhatsApp, huge channel, and it's going to grow and grow and grow.
It's going to be interesting. Future collections calls could be 5 minutes on Teams.
Well,
one click of open banking, and we're done.
Yeah, and there's opportunity for, like, well, within WhatsApp, I think there's options to do video calls and voice notes. There's all sorts of options available. I guess from my point of view, it's about giving the customer as many choices as we possibly can for them to engage with us in as many ways as they possibly can. I'd probably, one thing I will say about, obviously, your Zooms and your Teams and stuff, in terms of scaling that, it might be quite difficult, because what is the most prominent used app in that scenario? What customers have access to different to those channels? Because again, everyone has the favourites in there. I have Zoom, but I speak with clients that prefer Teams, and it's everyone has the favourites, and it's about giving options and making it as convenient as you possibly can to the customers.
Yeah.
I didn't mean to cut you off. I was just going to say that it is that one-to-one, right? I think the one thing that I thought was real interesting was, like, in some of the other platforms, if you're using like a messaging solution or chat or whatever, you can actually have concurrency in your engagements. And so you can actually, because there's always that lag, right? So you can actually make an agent more productive without burning them out. But we were able to regularly prove in some place I used to work that you could actually get more throughput and higher satisfactions in those chat channels or in those messaging channels than you could directly through, I guess, either video or phone directly, because that is a linear one-on-one engagement.
I think key to that is going to be staff and colleagues, and really that comfort level, because collections can become a difficult conversation. But does it also take the sting out of the sort of, venting? And actually, when you can see somebody, do you instantly build a rapport? I mean, yeah, that's going to be a really interesting development. Look, we're pretty much out of time. I think we've managed to stay on topic. We've not been distracted by any other breaking news. I really want to thank Rich in particular for joining us from over the pond. Really great to hear your experience. I think, Daniel, we would all like to sign up to your press release in April when you've got those amazing open banking stats and whether open banking based INEs are more sustainable, lead towards sustainable arrangements. We'll be looking forward to that. And Sam, thank you so much as well for joining us. So many insights, so many rich discussions. Thank you so much. I think the future for collections is going to be around customer experience and choice. And I look forward to seeing that develop, as I'm sure we all do. So thank you very much. Thanks for all the questions. I'm going to pass back now to Colin, who's going to finish off the session.
Lovely. Thanks, everybody. Thanks,
Thank you.
Vanessa, Sam, Dan, and Rich.
Thank you.
Thank you.
And obviously for your insights today. That was really, really good. And of course, everybody who's tuned in and hope you've enjoyed it, contributed to the polls. It's been really good, and lots of good questions. As I say, continually saying all day that if you've got any questions that we don't cover off today, we're going to write up in the review next week. So we'll look out for that on the CreditConnect website. We've got lots of events coming up over the next couple of months and across the year. So have a look on our events tab there, and that'd be great. I'd like to end though by obviously thanking all of today's sponsors: CallMiner, First Source, Liteco. It's been really awesome. And of course, thank all of our speakers today across all the 4 sessions. That them taking time out, especially on a day like this where there's lots of breaking news and things that are definitely going to impact all of us, especially people involved with collections, is really, really awesome. So I really appreciate that and thank them for their time. That is really good. If you've got any questions about taking part in our events, as Vanessa mentioned earlier, we are trying to be more diverse and get more people from different backgrounds involved with these events, different areas of collections. That would be great. Our next event coming up on Tuesday, the 29th of March, we're running a lending technology think tank, different slant from our collections, but nevertheless could be of interest to a lot of you tuned in today, especially in light of what's going on at the minute. So we'd love to see you on that event. We're planning our next collections online technology think tank. We're still staying online virtual for a while, just because we pick up different audiences as well. That will take place in July time. We'll announce that date soon. And as I say, we'd like to attract more people to that. And then later on this year, we've got some commercial collections events coming up as well, business collections. So that's another one. But later on this year, we've got our 6th annual Credit and Collections Technology Awards, which take place on Thursday, 17th of November. Award entries are open now, running through to the summer. So we'd love to see lots of new technology innovation involved with that. Any kind of lending or collections technology innovation will be really good. And we're planning as well to bring back, we did a face-to-face version of the Credit Collections Technology Think Tank back in November last year. That will be on Thursday, the 17th of November in Manchester as well. So 2 events face-to-face to look forward to. Obviously, I hope to see a lot of you at some of the different industry events that are coming up over the next 6 months or so as well. It'll be good to get back out there and network when we can, and hopefully we can all stay safe and well across that time period as well, with this pandemic taking lots of twists. But essentially, let me round up and say a massive thank you to everybody who's involved. For people also in the back end, we have a couple of people who help us with the operations side of that, so I'd like to thank them as well. Big thanks to Sam, Rich and Dan for this session, and of course a massive thank you for Vanessa. The event wouldn't be what it is without her, so really appreciate that, and especially working ad hoc as we have today, it's been really awesome. So I'll round up now and see you all soon, and as I mentioned, there'll be reruns of this online if you've registered and on our YouTube channel soon. So that's all from me. Goodbye and have a great day and a great week. Cheers.
Thanks. Bye.
Thanks
Thank you.
everyone.
Bye.
Bye.